power women are part of the Ibla jury, not because they are women, but because between them, they manage about 40 lakh crore of assets. That's, almost 25% of India's GDP. And that's why we have to talk business here. We have to talk economy. Everything's going great guns as far as the economy is concerned. If you compare, say, from 2012 to 2017, look at, say, inflation, double digit, and now to single digit. We were almost at 1%, actually. Current account deficit, we were running at 5 and 6% in 2012, and now we are running at 1%. And even that perhaps will be less, looking at the strength of the rupee. The rupee was one of the fragile five, and now it's a picture of stability. Fiscal deficit, we were worrying whether we would get to 3.9 and 4, and now we are 3.2 with comfort. Of course, the terrain has also been changed. We've got an earth-shaking, goods and services tax. We have a bankruptcy code. Never in 75 years we thought that the legal process would be so fast. And now we have a buy-in from everyone: legislature, executive, bankers, borrowers, the lay public, and the judiciary. So clearly the terrain is changing. There's just one guy who is not present at the high table, and that appears to be growth. So to the person who perhaps has the largest chunk of the economic decisions to make, Mrs. Bhattacharya, what's your sense? Do you think growth is just around the corner?
One of the main reasons why we are not seeing the kind of growth that we would love to see is, of course, the fact that even today we are not seeing the investment piece of the thing coming in. I don't think we have a problem on the consumption piece. The consumption piece has seen some dips on account of some of the reforms that have come in. But these are all temporary in nature. And we are 100% certain that these dips will be behind us shortly, and you will see the kind of consumption that we were expecting to see or that is warranted. The problem lies in the investment piece. And in the investment piece, yes, there is still a hiatus, and that we are not seeing happening immediately, because investment is something where a pipeline needs to build up, and the pipeline takes time to build up. So we are seeing a little bit of it coming in now, but we are still not seeing the kind of steady inflows that we would like to see in investment. Again, two reasons for this. One, of course, is the fact that the capacity utilization is still in the range of below 75%. You need that to go above 85% for us to see much of new investment coming in. And the second, I think, has been the very many changes that have happened in the Indian economy, as a result of which people are still probably working out the new models of doing business. And that, I think, is also something that may be delaying investment a little bit. But having said that, I don't think growth can be very far behind. A country as large as ours, with the kind of demography we have, with the kind of macro numbers that we are displaying, growth cannot be far behind.
Oh, that's good to hear, especially when it comes from someone who's taking a call on such a large amount of money in the country. But on that note, Chanda, what would be your thoughts? You have moved a goodish bit to retail growth, but is that just a stopgap? Would you say that perhaps by the last quarter of the current year, or even the last quarter of the calendar, you are going to see maybe the first signs of capex?
See, Latha, first of all, as you said, as far as the macroeconomic indicators of the economy are concerned, we are at a dream run. We've never had all the indicators coming together so well, the deficits, the rupee, the foreign exchange reserves, and so on, all those together. Talking about growth, also I think we should understand that we have all been used to finding growth as synonymous to few large corporate sector investments. I think the structure of the economy is changing. I think the growth is coming from various other forms as well, and not just the large capital investment. So if you look at consumption actually continues to grow. Yes, you'll have some quarters looking different because of, some preponement on account of GST, and therefore, but I think these are all transient issues, but overall directionally consumption continues to grow, and therefore even the retail business of the banks continues to grow. The second is the government spending continues to grow, and with the government spending comes a kind of second order benefit to the private sector as well. So as the roads contract contracts get awarded, some of those contracts come to private sector. As railways contracts are getting awarded, some of the multiplier effect is coming to the private sector. So I think that's the second sliver of growth. Well, yes, the large capital investment is not there, and I think that's going to take a little bit of time before it comes back. I think before it comes back, the capacity utilizations have to go up. Before it comes back, some of the existing projects that are stuck, some solution has to be found. The balance sheets of some of the large corporates have to get restructured. So I think those are the things that would happen, and therefore I think capital investment of the large form is a little bit far away. But then we also have the fourth sliver of growth, which is entrepreneurship. I think today the economy is not just about large industries. The economy is about value chains. So one value chain on a retail link creates a whole amount of entrepreneurship opportunities, and so on. And agri creates a whole amount of entrepreneurship opportunities. So in my view, consumer is growing, entrepreneurship is growing, government spending is growing. Yes, what is missing is the large capital investment. That will take some time to come, but I think the growth will increase with these three slivers just now.
Oh, no denying the consumption growth. All of you struggled to find one winner out of five, and you thought all five of them had to win because you had at least five companies giving you 25% and 35% growth with a CAGR of over 5 years. So no denying, of course, that consumption is doing very well. But let me come to you on that issue, Zareen. One last worry on growth is we seem to be slowing at a time when the global economy is growing. And, at Stanchart, you would be able to testify to that. Global economy kind of took off in mid-2016. We've waited 3 quarters. We're not exactly at that time we seem to be slowing. Do you think it's something to worry, or is it a matter of time?
No, so Latha, I feel that the economy has gone through some disruptions, demonetization and now GST. And we've seen globally that countries which go through GST, actually pre-GST or post-GST launch, 1 year, they do take a bit of slowdown of growth. And post that 1 year, actually we've seen, and we've mapped it for 5 years subsequent to that, we've seen 1 to 2% growth in GDP just because of the GST. So I think we will see after a few quarters after GST stabilizes, we will see a pickup in the growth. The other thing is that as a country, we have a very low tax to GDP rate. And clearly, I think the whole digitization, the less cash in the economy and GST, all these will have a triggering effect, which will take the growth higher.
Okay. So GST plus, of course, public investment picking up, hopefully, with more tax money. Shikha, you all have a substantial amount of equity and debt capital segment as well in Axis, besides the bread and butter lending business. If you looked at the loan growth numbers only for banks, then it looks like, 5 and 6%. But if you looked at total loans to the banking sector, to the commercial sector, then it was a good 12.8%. So not a bad number at all. What is the sense in the current year? Will banking regain a larger or a faster pace of lending? What about loans to the commercial sector? Will it be better than FY17?
What you talked about, Latha, is a phenomena of excess liquidity in the system, and therefore markets being able to deliver debt or equity at a cost cheaper than anyone would have imagined. I would think that, and I'm stepping out a little bit in saying that, but I think India is going to see a regime of low interest rates for a while. If that is the case, then we are going to see cost of capital come down, both on the equity side and the debt side. And that's why, Kaku will confirm this, we've had a bumper year as far as equity is concerned. As far as debt and short-term borrowings are concerned, because of the excess liquidity in the market, lots of corporates have gone to the market. But as that arbitrage evens out, and it will, because bank cost of funding lags a little bit the marginal rate, right? Because there is a transmission issue here. So I would think that in a quarter to a couple of quarters, some of that transmission will get completed and the arbitrage between markets and banks could narrow, and that should certainly see bank lending doing better relative to market borrowing over the next couple of quarters. So net-net, I would think that yes, bank lending to corporates by the time you come to the end of this financial year should be looking different from what it's looking right now.
How much better?
That's hard to pick a number, but I would say at least a couple of percentage higher than where we are.
Okay. Well, actually, the person who knows a little bit about consumption more than those who lend for consumption is Shobna. So let me ask Shobna, I know in your case, it's a need-to business. People don't go to hospitals for pleasure. But nevertheless, are you getting a sense that the economy is on the uptick and that the second half of the current year would be better than the previous second half?
Let me recuse myself from the hospital sector and concentrate on industry per se as CII. I think that what we're seeing is that what Arundhati and what Chanda and all the others have said, that the people that need to come to the party is industry to kick the whole growth story up.
That's yourself.
Yeah, and this will happen. You'll see new capacities happening only, I think, early next financial year. We're all at 70-75%, but everyone is spending a lot on optimization, so we're bringing in, better usage. Also, I think what really needs to be stressed on in conversations like this is where are the jobs? So I think that's a huge focus in industry now, to see that we get jobs across the pattern, because consumption will slow down when right now business confidence is still high.
But what are your colleagues at CII telling you? That they will be able to generate jobs probably in a couple of quarters? You think that happening?
It'll happen, but it'll happen in different ways. It'll come from retraining, it'll come from industry 4.0, it'll come from disruption, but it will also come from new capacities being added and new industries like logistics, e-commerce, all these. And I think tourism, healthcare, there are a whole bunch of underlying sectors that from the jobs perspective are underperforming.